In trading, knowledge is power, and lack of knowledge in what you're doing can be costly, very costly. So you need a solid foundation of quality market education. Whether you're new to trading or a seasoned veteran looking to add advanced strategies to your arsenal, there's always something to learn and something to improve on. And now you can access the same knowledge that professional traders receive with Market Rebellion's Trading Education. I'm Bill Johnson, Head of Options Education here at Market Rebellion, and we've assembled a comprehensive curriculum based on decades of real trading experience, covering everything you need to know about trading options from beginner to advanced. We go way beyond the nuts and bolts of options theory to teach you how to apply specific trading strategies and the techniques needed to adapt your trades when markets shift. Regardless of your goals, you'll gain access to the education you need with easy-to-consume lessons so you can learn to trade with confidence, enhance your knowledge, and master the practical skills required for market success. So please join us for in-depth trading education only from Market Rebellion. Hey, good afternoon, Market Rebels. Stu, I can't believe we're already into April.
I don't know how that happens, Bill.
I don't know how it happened. It seemed like we just came out of New Year's and
Is time just decaying away?
exactly, time kind of decaying away. But speaking of time decay, I have a presentation that I think everybody's going to love. We actually did it earlier today in our Q&A, and we thought that a lot of our YouTubers out there that this would be something that they have never seen before, but things like this we talk about all the time in Q&A. But we actually went into a lot more detail, but we want to at least give people a little taste of a different perspective on options. So ready for our question here, Stu?
Go for it, dude.
Here we go. Chalk Talk, do options decay over time? Now, some people say, well, of course they do, because their value becomes less, all things being equal.
Diminishes.
That is true. Yep, that is true. But we also think that it's a bad mental model because if you see it as if they're decaying, you feel like you have to fight this. And that causes people to have different ideas about strategies, or, hey, if I sell out of the money naked puts, it's free money. I call it printing money. That is not true, as you're going to find out here. And it makes people trade for the wrong reasons.
So it's really important the way you said that, Bill.
Mm-hmm.
People feel, you said people feel they have to fight this. I think that's how you said it.
Yeah.
And that is a choice. And it's a choice that you can choose to fight it, or you can choose not to fight it. There's
by
always the other
perspective. Yep.
There's always the other side of it. And if you can open up your eyes a little bit, everyone, and kind of see what we're going to do here, and just have a different perspective on what is actually happening with respect to the tails and the probabilities and all that, you'll be able to make a more informed, a better decision about whether you do want to fight it or not.
Right. So the topic that we have is kind of interesting here. Options market is a sorting machine. That's probably not a way that most people have heard about it. And that's why Stu and I are saying it's really the actual proper perspective. But if nothing else, it will help you to better understand what options are all about. So what do we mean by a sorting machine here? Well, as we talked about in Miami recently, instead of just thinking about a stock going through time or options moving through time, we like to think about this space as information time. You're either moving through information or you're moving through time. Most of the time, you're doing some of both.
Both. Yeah, both. For sure.
Exactly. So what we're really doing is saying as time goes on, we're gathering information. This is the part that traders forget. And they either, as we'll see, can lead them to think, hey, no problem, we've got time, let's hold on to these options. or hey, this option expired worthless. Well, why not understand the information we gained from it?
Even if the information that you're gaining
Is
is
not the
no
information
information,
or not the information you wanted.
or
It's still
not the information that you thought was for you, that you thought or bet on or assumed
it's
was forthcoming.
it's still information. Right. So do options decay? Well, take a look at this. Let's say we have a $100 call priced at 3.
Mhm.
We look at our broker's platform, it says that theta is 0.02. So most people know that that means if 1 day passes, all
Two
things
cents.
equal, we're going to lose 2 cents. That should be trading for about 298.
Mm-hmm.
Okay, so you go into a pricing model, maybe this is a 30-day option, put in 29 days, that number would become 298. That's what theta is showing us. But now let's say the stock jumps to 120 like that.
Overnight.
Not even overnight. Let's just beautiful trade, but again, it's a thought experiment. You just bought the option and bang, news headline drops down, stock jumps to 120. That $100 call is trading at parity.
Okay. 20
Trading
bucks.
trading at $20, which is the difference between the strike and the stock. Now
Yep.
here's the question.
Where's the $3?
I knew you'd know that. Where'd the $3 go? See, if people say that time decays an option, they can't explain that. The reason that it went there, where did it go?
It went away.
It did go away, right? You can't
It
refute that.
disappeared into theta heaven.
It disappeared into theta heaven, but why did it go? See,
And
what
where did it
happened,
go?
right? So it resolved into information. So a different way of approaching options is that time value, or the extrinsic value, is the cost of asking questions about the future. And if you approach options this way, instead of saying, I have a feeling it's going here, oh, it doesn't work after X%, let me cut it and move on. Let's look at it from a different perspective and say, well, what information did we get? What have we learned about this? Maybe
Mhm.
we want to stay in it. So in this example, what happened is we just said we never moved across time, and instead we instantly resolved across information. That's where your $3 went. You moved along this axis and not along this one. And once you take that perspective, it's going to change the way that you create strategies and see options. Now, before we're going to show you a very cool demonstration, but as always, give us a quick check here, marketrebellion.com/get started. Lots of cool topics just like this, articles, videos to help you get that firm foundation. So, what's this whole idea of sorting? Market sorts options into either in the money or out of the money. Now you might think, hey, wait a minute, what about at the money? Well, at expiration, at the money is just as good as out of the money, right? No intrinsic value, it's worthless. So what we want you to do is to have this different mental model that you're saying, okay, as time and information, right? Not just time and information are arriving to the market. I think that's going to be an in the money option. I think that one's going to be out of the money. Not sure about these. More time goes by, more information comes in. I'm pretty sure that other strike down there is going to be out of the money. I'm reasonably sure this one's going to be in the money. The market's trying to sort these strikes.
And both of those items, time and information, are both occurring all
Both
the time
at the same time.
at the same time.
Right. So as time passes, new information reaches the market, right? So time isn't necessarily bad. It's if no information reaches, that's what's going to make your option decay, not just time. So the market decides which tails. Now, this is going to be a cool demonstration. It's going to eliminate from the tails first. We're going to find out why. But at expiration, what do we know with 100% certainty? We know where
Well,
the stock is. Right?
yeah. And we know whether that option will be in the money or out of the
It's
money.
everything's easy at expiration, isn't it?
Easy.
Because all calls we're going to use calls for our example here, but puts, just flip it around. But all calls to the left, all lower strikes than the current stock price
In
are
the
in the
money.
money.
hmm
And all of them above or at the money or above are essentially out of the money. Remember, there's no at the money at expiration. So all calls to the left are in the money. All calls, I should say, equal to or to the right are out of the money. Now, for a good demonstration, this is
Well,
something
we could get a pin, but we're going to eliminate that idea.
we're going to eliminate that. Yeah.
Yeah.
So here we go. What we're going to do is we're going to create a list of numbers from 0 to 20. I'm going to let these be kind of our strike prices. Now you might think, hey, wait a minute, there's no zero strike. This would be highly unlikely to see on a board. That's not the point. Make that 100, make that 200. They're just placeholders.
Yeah.
But for our demonstration, you'll see why in a second, they have to be from 0 to 20. We're going to start our stock here at 10.
Mhm.
And we're going to let some random coin flips. Now remember, we can't see these. We can see them for the demonstration, but they haven't been flipped yet. And this is time and information. So let's say that we have 10 units of time. We're going to do a coin flip 10 times. We have 10 units of time. You want to make it 10 minutes? Fine. 10 weeks, 10 months, whatever. Right? That's what, or you could say it's a year. Fine, divide it into 10. Each flip is 36 days. They're just 10 time steps. So now we flip our first coin. Now remember, we don't know this ahead of time. I just put this here for the demonstration. And
Which way are we going? I guess we're going to go to the left when we flip.
Thank you.
Heads?
I should have, yes. In this model, heads is telling us that the stock moves up. Tails is telling us that we move to the left or move down.
Okay.
Yep. Thank you for that. It's good clarification. That's our stock model. So now we flip the coin, we get tails. What do we know? The stock has moved here. Now here's where things get interesting. Most people think, who cares? It's only been 1 unit of time that's passed.
Mm-hmm.
But the market doesn't see it that way. The market is a sorting machine. So Stu, if we have 9 units of time left, we're starting at position 9.
Remember, we had 10, everyone. Now we have 9.
We had 10. Could we ever get to 20 now?
Statistically, the answer is no.
Correct.
Right? There's only 9 left. So 9 and 9 is 18. That means that 19 and 20 are history.
Right. See, when we started out here at 10, it is possible, not likely, but it is possible that 20 comes into play. We would need 10 heads in a row.
Yeah.
It is possible we could get to 0. We would need 10 tails in a row. But once we flip tails, the market says, aha, we've learned something. I know we're now hovering over 9. Again, that's our stock price. But because we only have 9 units left, 9 plus 9 is 18. The very best you could do is get to 18. And that's if you got 9 in a row. So what do we know, Stu?
We know that the stock has moved away from center. We know that the far end of the 1920, that tail that we always talk about,
Yep.
the farther out of the money, it is now farther out of the money. The
Yep.
stock has moved left. It's the perspective that people miss, and you got to keep that in mind, right? That's where we talk about probabilities, right? That probability of getting to 19 or 20, while it becomes statistically 0, it doesn't mean in real life.
Hold that thought for a minute. Let's stick to this model right here. Okay. What do we know for sure? What do we said we moved away from the tails. What do we know that we cannot do right now?
Well, we can't get to 19 or 20.
So the market learned that from one day or 1 unit of time, that these are now off the table.
So what happened to the price, or what happened to the price of that option?
Price is now 0. Deltas are 0. They're gone.
Right.
Even though you might say
hey, no time went by.
Yeah. Or you might say, hey, wait a minute, I still got lots of time. It doesn't matter. Statistically, the market is saying those are gone. They're eliminating from the tails towards the center. All right, so now we get some more information. Another day, unit of time, week, whatever passes. We get heads. What does that tell us? Stock moved.
Going the other way. Yeah.
Stock is now here. We know that. And the market says, okay, what's the best? We have 8 units left, right? 10 minus 2. We could get to 18.
We could.
Unlikely, but that's not the point. We could get there. But what do we know about 10 minus 8?
Well, we know that 0 and 1 have gone away.
0, 1 are now eliminated. Those are now what? In the money, they're delta 1. Right? These are call options. These are lower strikes. These are higher strikes. So those now went delta 1. We get more information. We flip tails. What does that tell us?
Going the other way.
Going the other way. Now we have 7 units remaining. 9 plus 7 is what?
Now you're up to 16.
16, but 9 minus 7 is 2. We could hit here.
We could.
We could hit here. So
But
the
notice
market
how
says,
you're left of center and you're closer to the
and you're
end
close.
of the
Exactly. The
left
market
tail.
says we're not worried about the probability
We're
right now.
not we're not giving up on it quite yet.
We're not giving up on it. That's a good way to put it. It is still possible that it's in play. But what do we know for sure? 9 plus 7 is 16. What do we know about 17, 18?
Statistically, their history.
Their history. They just went delta zero.
Probabilities are down, probabilities are out the window.
Right.
They are the option is statistically not worth anything. It has a low to nothing probability.
Yep. Now again, here's where traders make their mistake. Hey, I still have the bulk of my time. I only need the stock to go back up here. That is not true. That's a mistake. They keep going, I got lots of time. They're not realizing that these tails are getting compressed. This bell curve is shrinking. All right, so what happens? We get more information.
So hold on, time out. So the tails, Bill, you're saying are shrinking over the time.
We're not shrinking from the center. We're
not
shrinking
just the movement, right? You're moving from the ends in instead of thinking about from the center out.
Exactly right.
Yeah.
So instead of people saying, "Oh, I want this option because I think the stock is going up," if we look at it in terms of information over time, now we flip heads, stock goes up. What do we know? We have 6 units remaining, right? 10 minus 4. We have 6 units. 10 plus 6 is 16. As you said, we've moved closer to this tail, so we know that's still a possibility. But what do we know about 10 minus 6? 2 and 3 just got knocked out.
So those deltas are now in the toilet, and 16 maybe pops up a little bit.
Correction. These are delta 1. Remember, the lower strikes are in the money.
Oh, these are calls. Got it.
Right. They're not going to. In other words, they can't fall out of the money. Right.
Yeah, correct. My head just goes to synthetic.
I know we always go synthetic to puts.
The puts.
So those are, but they cannot fall out of the money. Is the way that we want to look at this. They're out of the picture now. They're delta 1. Market has learned this information.
Again, probability wise, statistically wise, doesn't mean it can't happen.
No. Hold. You're jumping.
Sorry, man.
We got to stay in this model.
That's 30 years of floor trading talking.
Understood, and that's fine. We're going to get to that, but stay in this model for right now. In this model, they're delta 1 because in the real world they will go delta 1.
Yeah, they will.
Yeah, they will, or
eventually.
Delta 0. Now, here's the other thing to notice. Notice that we are at exactly where we started. But what's different? Time has gone by, and we've done what?
The tails have compressed.
We've shrunk the tails. That is the part that traders miss. They go, I still have lots of time. Don't worry about it. We have lots of time. They don't realize that the tails are shrinking.
Yeah.
So now we flip our coin. We get movement to the right. We have 5 units left. 5 plus 11. The market says that's still a possibility. But 11 minus 5 is what? 6, 4, and 5 got knocked out. Or maybe we should say knocked in. They are where you now know that they're delta 1. Right? Market says, all right, those are delta 1. We have tails. We move back. But we have only 4 units of time. Again, this might be 4 months. You might say, oh, we still have lots of time. They're not understanding or appreciating. Yes, but relative to where you started, those tails are shrinking. So 10 plus 4, very best we could do is 4 consecutive heads would put us at 14. 10 minus 4 would put us at 6. So the markets are saying, all right, that's still in play. But 15 and 16 just got what? They're out of the money. They're delta 0. We flip heads. We move up. What happens? We have 3 units left. 11 plus 3 is 14. Those are still in play. Right there, 11 minus 3 is 8. 6 and 7 just went out. We flip again. We get more information and more time has passed. We move up. What do we know now? We have 2 units of time. 12 plus 2, we could get to 14. 12 minus 2, we could get to 10. No way to get it to 8 and 9.
So, Bill, this actually came up yesterday in one of the webinars.
Yeah.
Where a client was asking about an option that had gone to pretty much 0.
Right.
And it was an issue because they couldn't get out of it.
Right.
statistically, what happened here, guys and gals and ladies and germs and traders, is that the information is getting resolved. The
Information's
value
getting
of that time became worthless, and
because that information became known
because the information became
statistically.
known, and
That's
now
right.
the trader is thinking, well, what am I going to do with this option that now has a pretty much zero or close to zero value to it? What,
Might as
like,
well
why
hold.
would I keep it? And it's
Why
a
would you
big.
close it?
Why would you close it? Is the question
That's the
exactly?
question. Why would
Why
you
would you
close it?
close it if there's no money in it?
It's
Why
not
are
going to
you
hurt you.
looking
Right.
to get rid of what has a very, very low
Right.
statistical, or maybe even zero at the time, statistical probability of becoming something that has zero value, when there's everything to gain,
Right.
even albeit very low chances, or 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 it's already zero, or it's going to zero, which is already zero. So
Right.
that is not the issue.
It's not the
See
issue.
that, and people see that. Oh, those market makers, they're not giving me any bid. I can't get out.
This
Well,
is why.
Why would you want to get out? Just hold on
Right.
to it.
Right. If somebody gives you an option for free, I don't care how
Take
far
it.
out of the money, you keep it.
Well, they get swayed
And
by,
they get
well, I
swayed.
paid five for it,
Right.
and I
And now
lost
it's worth 10 cents. Let me
99%.
close it. Right.
I'm out. I'm down 90%, or I got to close it.
I got to
This is
close it and salvage some money. It's a
I got to salvage the money. I paid $1.25, and now they're a dime. Well,
yeah,
I guess I got to get out. Really?
amateur mistake.
Really?
We see that a
What are
lot.
you doing, man? It's just
Not understanding
put
it's
it in
about
your pocket, save it for
gaining
a rainy day.
gaining information. So now let's flip a coin here. We get tails. We go left. What do we know now? Those are off the board. Now, this is a good visual for gamma. Can you feel the tension here?
I feel it.
One little move, man. This is like the seconds of the football game with a one field goal lining up. That's gamma. It's going to swing hard. And what do we see? We get heads. We move right. What do we know? Bang! Those instantly go out, and people go, "Oh man, this is because it's too dangerous. I got to get out." No, it's resolving information. The game is about to, this again. It's the 3-point kick with seconds to go.
This is a little off topic, but I'll throw it in real quick here. So this is what you could see as you close in into expiration, move into and
Oh, for
close in on the expiration on a high open interest option, where this gamma is creating all this delta on
oh
either
yeah,
side of the coin, and traders are going in hedging that gamma with buy. We're talking calls here. Buys on underside of it,
yep.
and I mean buys of stock and sales of stock over it, and causing that compression, that we call it the pin compression of, that how's the stock ever going to get out of this? And sometimes it does, and sometimes it doesn't. And there's, and whether you're long or short, it's the same thing. I mean, the same thing is actually happening, but that's what's occurring here. That that tail is just going, like, straight up.
Straight up.
I mean, the tails are kind of going away, and the point is,
Yeah, it's
like,
almost not even a
that's
tail
it.
anymore. Right.
Yeah,
Now
right.
let's take it. Now let's extend this model. There's a couple of things we can look at. One, this is kind of back to your point. It's all about probability. Now, in here, we said this is all it could move. That's why we're able to eliminate these. But what if we had a change in volatility? Now, instead of saying each head moves you right one step or tails moves you left one step, could we change it to where heads moves you right 3 steps and tails moves you left 3 steps?
Well, for sure,
That,
the answer to that obviously is
that's a
yes.
change
So
in
what?
volatility. So now what do we know about 10 or even these? Oh, yeah, see, these are still in play.
They kind of came back to life,
They
right?
came
Even
back
though
to
they're
life.
statistically dead, we got some new
We
information,
got very good. We
right?
got new information. We're
And
saying, and
then that
now,
tail that really didn't exist kind of like reared its head again, and there you go.
yep. So these options that were delta 1 suddenly go delta 92. They're going, well, we're not 100% sure they're going to be in the money. And these out here that might have been, that we might have said have no chance that are delta 0. Well, now if each step counts 3, we got 12 more units.
Now all of a sudden you got
Now
some delta in
suddenly,
those
now
options.
suddenly these are not delta 0 anymore. Right. Now, the final thing that's cool about this model, if we put some probabilities in here, which we could do. We could say we know beforehand what these probabilities would be. And if we made the payoffs $1, those probabilities would be the option prices. This is what you're looking at when you look at your options chain.
At the matrix.
Now, in a little side note, I know some of the math people will pick this up. If we did put probabilities in here, which is why I didn't do it, because of the not put call parity, but because of the parity, odd or even, with this game, you have to end on an even number. You have to end, so you would have 0 probability for 1, 3, 5, 7, 9, and so on. And that starts to throw people. I thought, let's just not go it. It gets the point across.
And don't feel bad, everyone. I didn't even follow what Bill just said, but it doesn't matter. It's okay.
Well, it's just saying if you start out at 10
Uh-huh.
and we get 10 flips, okay, what happens? Next one you're going to be at 9, right, which is odd.
Yeah.
The next one you're going to be at 8, which is even, and then 7, which is odd, and then 6 is even. And after you go through 10 flips, you have to end on an even.
You have to end it.
You have to. So that again,
0.
there's some little quirks. That was not the intention of this model, but we still could put probabilities in there, and those probabilities would be the option prices. This is what the market's looking at now. Stu, let's do part 2 here.
Yeah.
With this, let's see it in action. Now that you understand conceptually what's happening, I have 360 days, 40 vol. I have a stock at 200. The reason I did that is that with these times that you can get way out here in the tails, I wanted to include these tails, but just call it the at the money here. And we've got a comparison curve. They happen to have the same time and volatility, so we only see one curve. Now, what happens as time goes by? What do we see in the coin flips, everyone? What happened to the tails?
They get compressed.
We're not going to compress from the center. We're compressing from the tail. So watch this. If I go 300
from the edges in.
Correct. Right. So we're
it.
going to go 300. We're going to knock off 60 days.
2 months went by.
There you go. And notice that we've compressed from the edges. Now, this difference between the black and the red line is additional value in the options that has now disappeared for the reasons we just saw. It's just not as discrete as yes or no, off the board, on the board. But it's the same idea. It's just in what's called continuous time instead of discrete. Now let's come over here to 200 days. See, now you can see the mistake that traders make. Oh, I bought it as a leaps option. It's still a leaps. We have lots of time. The stock just needs to come back. That is not true because your tail's compressed. Your tail's compressed. Now, what if we do this? What if you maybe bought those leaps during high vol, saying I can salvage myself by going out in time, which is not true because you pay for it. But let's say that our vol is typically at 20. We buy these at 40% vol and it comes back to 20. What do you think is going to happen to that red curve now? Bang. And people say, oh, don't worry about it. We still have lots of time. They never think about looking at Vega. This is the first place Stu and I, or one of the first places Stu and I will look, is what has it been historically? Where might we be moving? So again, traders will look and say, oh, we've got the majority of the time left. But they don't see that the tails have been compressed and your probabilities are greatly, in a lot of cases, basically chopped to 0. But they'll continue to hold because they have time. Now, watch what happens if we go to maybe 60 days. You know, this is what Stu was talking about. You're just going to get compressed to where it's just a spike. And this is what we saw. This is the gamma. Look at that gamma. Remember we were on that last coin flip and I said, can you feel the tension? We know for sure if the game is won or which ones are the winners and losers at that last instant.
So think, everyone, what's going to make that stock price go from 200 to 250? What's the only thing that can make that stock price move up there? You're holding that 240, 250 option. What's the only thing that can get you back to
change back to here?
Right? It's got to be a news event.
A news event, which is going
to be some new information that enters into the market.
Because you're not, obviously you can buy more time, but on your current option you can't. But what could you do? Let's go back to maybe 60 days, and we're going, we'll make it like this 260 strike is kind of.
You can stay in the game. If you choose to, you can stay in the game, but you have to roll it out.
Okay, but I'm just saying if we stay with the 60 days, what if volatility, this is your news event. See, now they're back in play. Now they came back into play because you're watching volatility. You
So
understand
these are vol. What he's showing here is vols are going up and down,
vols are going up and down.
which really means that the
Expected news.
range that the market is projecting is becoming greater.
Right. In other words, the expected news. Options are sorting according to information. It is not just a fight against the clock. It appears that way if you don't get information, but if you're not using, in that case, a lack of information, you're missing what could be important information. All right, we talked about it in Miami. If you have five, we said like a detective's example, if you have 5 suspects and you eliminate 3 through DNA, not the information you wanted, you shouldn't say, you know what, this isn't working out, Stu. Let's close this case and just move on to a new one. You're going, but we learned something. We learned where it's not.
You got a lot of information.
And you got a lot
Narrow
of it.
down your search.
Exactly. It wasn't the information we wanted, but we knew how to use it. We're going, it's still okay. And that's how we use the options. We're going, yeah, it might not be what we wanted, but we're going to use the information. So now the last thing I wanted to show here is that if we go back to 360, we know the square root pricing rule. If I knock this to a fourth of the time, which would be 90 days, what's going to happen? The curve gets cut in half. Now watch what happens. Let's come back here, 360. If I knock volatility in half, not by square root of time, but in half, what do we get?
Wait, let me guess. Same thing.
Exactly the same thing. So in other words, the compression in volatility is really critical. And a lot of times traders go, wow, we just went off this cliff. It's normally trading at 20 vol. It's now trading at 70. Let me roll out to a 3-year leaps option to save me, not realizing you just loaded the boat with a lot of danger. Those tails, when those vols come in, are going to compress even if the time doesn't move that much. You have made yourself statistically out of the money. And that's the reason that people get confused with trying to shift out to longer dated to save them. So we thought that would be a good
So the next time you say in a chat room or to yourself or to your neighbor or your trading buddy, do you think these have a shot?
And you say, no, let's roll them out for 2 years into
It's
high vol.
you got to take into consideration all these different factors here.
That's right.
There's always a shot, but you can't have that conversation unless you attach a probability to that shot.
Right.
And that's what the market does. The market prices that probability.
Yep. Yep.
And you have to pay attention to that, or else you're
you're not playing the game.
Shooting in the wind.
You're not playing the game. So with that, let's go back to our chalk talk. What do y'all think now? Hopefully you have a little different perspective. Do options decay over time? A professional trader would say it can look like it, and a lot of retail traders think so, but to take yourself to that next level, you want to say, no, they reveal information. If it's not revealing the information that you need, yes, the options price will decay or appear to decay, but don't forget why. It's not because of time, or at least not because of time alone. It's because it was time and information.
And a lack of information.
And in that case, a lack of information acting together.
Yeah, always remember, information comes as information, but it also comes as no information.
And that's right. Like they say, choosing to not decide is still a decision. Same idea.
Absolutely. Yeah, for sure.
So anyway, we hope that gives you some good stuff to think about. Those are things that Stu and I love to share with people every Tuesday, Thursday. If you're not part of our Q&A classes, please give us a call at Market Rebellion. You can find our number right there on the website and chat to one of our salespeople, get us in the Q&A. Would love to have you there. And if not, we will look for you next week, next Thursday on Coach's Corner, and we'll see you then.